Oh man, welcome back to another market open live stream. We got some positivity in the charts here finally. Really good news. Got the market opening up, calming down a little bit. Bitcoin with a nice candlestick here, pumping back towards 80k. Stock markets look like they're rebounding. Are we out of the woods? That's what we need to explore here. We've got some updates on China trying to strike a deal with the US. We need to get into that and a lot more. So if you like this type of stream, guys, make sure you're followed up. Make sure you share with those that would like to see the stream as well. And let's just chill and enjoy the market open together for a little bit. Don't forget to jump into the chat. Engage with me at any time. I can see the chat open here. And let's have some back and forth, which will be really good. So let's now first off start off by looking at the markets. You can see here on the hourly chart, we've opened up in the green. SPY, which is the S&P, is bouncing back 3.5%. The NASDAQ bouncing back up 3.6%. If I put this on the daily view now, the NASDAQ is now trading back higher than we opened on Friday, which is really good. Still a bit of a gap to get back to where we were last Thursday, of course, but markets are starting to come to terms. I mean, from the lows we saw yesterday, we've now rebounded 9% on the NASDAQ, which is no mean feat. On the S&P, from the lows we saw yesterday, again, 8%. But this is the kind of volatility you can expect from the market, right? The market's in a really volatile place right now, and it's all around tariff discussions. It's all around where are we going to end up in this tariff war. And right now, the latest we're getting today is that Trump had a great call with South Korea, and he says China wants to make a deal. So this is what the market's focused on. Now, if you go back to yesterday's fake news we had while we were on the live stream, where apparently this guy here, who you can see on screen, which is Besant, said that, it was a fake news, but it was rumored that he said that the US and Trump were going to do a 90-day tariff pause. You saw the market went berserk. Right? You saw the market really recover high yesterday, back to kind of the levels we're at now, 520 on the S&P. And then we found out it's fake and we went back down to the downside. It shows something important, that the market just wants a resolution to this tariff nightmare. That's all it wants. It just wants to find a resolution so that we can move forward. The underlying market is healthy, and to all intents and purposes, there's no reason why our Bitcoin and crypto bags can't start getting back to some meaningful levels once this is behind us. But the problem is, this kind of a tariff negotiation, such a delicate global geopolitical piece of policy reform, is going to be painful, it's going to be volatile, and it's going to have lots of ups and downs. And I think that's what the market is, just trying to balance right now in terms of their investment. So, coming to terms with it is a nice word, but again, we're just at the beck and call of a piece of news coming out. Now, I do want to go through this, which is what Besant has said. Let's watch this together and respond to the interview that Besant gave with CNBC.
I'm very happy to say by Treasury Secretary Scott Bessent this morning. Mr. Secretary, it's a pleasure to have you on. It's been a while. It's good to see you.
Good morning, Joe.
Market is trading higher today, and we did see what was welcomed yesterday, and that is a bounce from some of the lows and even a higher close on the NASDAQ. One of our guests, Mr. Secretary, earlier mentioned the resumption of the trade put. And not coincidentally, it coincided with your trip to Florida over the weekend, where reportedly you were stressing that the market needed to hear that negotiations about these tariffs were in play. Lo and behold, we did see a bounce. Is that a fair assessment? Do you think that's what happened?
Well, it's not a fair assessment of what happened over the weekend. I went down to see President Trump, as I do many weekends, and I can tell you it's all President Trump's decision, and he had a view on after Liberation Day that we should go into quiet mode and let our partners think about the kind of the shock and awe that he presented, and over those following few days from April 2nd, we had I think we're up to 70 countries contact the White House for how to come and negotiate. So, I would say that the negotiations are the result of the massive inflow of inbound calls to come and negotiate. Had nothing to do with the market.
I think the market took some solace, though, in kind of a change in in the perspective, just last week we were hearing no negotiations. Now we're talking about, you mentioned 70 different countries. We're approaching, Japan, I guess, was early in terms of placing a call to the White House. And now, in earnest, you and the U.S. Trade Representative are going to begin negotiations with Japan. I think that some of the stability in the markets, there's no doubt that's what I think helped massage the markets to some extent.
Well, look, Joe, my my advice on April 2nd to our trading partners was not to panic, don't escalate, and then we will see where President Trump is after a period of days or weeks. The response was overwhelming, so it was after a period of days, and he decided that it would be a good time to begin negotiating. The Japanese were very good actors. The president had a very good call yesterday with the Japanese Prime Minister that led to these negotiations. And look, the Japanese are military partners, they're economic partners. We have a substantial imbalance with them, and I'm sure that they are as anxious as we are to get this remedied.
Mr. Secretary, we spoke yesterday with Peter Navarro, and he described his view on these things as it's not enough to get to zero tariffs. You have to take.
And this is the exact point that's going to upset markets, guys. Because remember, Europe came out yesterday and said, we'll do 0 for 0. And what's Trump's response? It's not enough. It's like Trump wants retribution here, and he wants you to do more than that. He wants you to pay. Because ultimately in his head, he's got a number. He's a businessman, right? He's got this $1 trillion number. He wants that gap filled by hook or by crook so he can celebrate the win, right? And I think ultimately, it doesn't matter if you go 0 for 0 or you come to some sort of level of fairness. That's not going to be enough for him. I think that's what's going to ultimately continue to weigh in on markets. For me, that's what would worry me, is that people want to come into the table and do a deal with you, but if 0 for 0 is not enough for you, what is it you want? Do you now want an unfair relationship the other way, to what you're proposing?
Take down all the non-tariff barriers that exist as well. His proposal, as he's written about today, is to get rid of the VAT, the value-added tax on top of a lot of other things. That is what it would take for us to reach any sort of a settlement with Europe. Are you in the same frame of mind as Peter Navarro is when it comes to that?
Becky, I think everything's on the table. So they're tariffs. The academic literature shows that it's actually the non-tariff barriers, which are both harder to quantify and harder to, they're more insidious because they're hidden, they're obfuscated. So tariffs, non-tariff.
How convenient, right? These other non-tariff barriers. What are your ones that you levy on other countries? Why don't every other country come out and make up a number like how you've made one with no real backing? Because we spotted your formula, right? Which is, what is our deficit divided by the exports? That's the tariff plus other non-tariff, in effect, tariff you're putting on us, right? What if other countries calculate and said, hang on, you're being unfair to us? Right, what is this fake exercise you're doing? It just doesn't make any sense.
Barriers, currency manipulation, and then subsidies to both labor and industry. So everything's on the table, Becky.
Meaning that it would take all of those things for us to reach any agreement that would make any sense? I mean, the value-added tax isn't directed at us. It's a tax that every manufacturer, including those that are based in Europe, pay as well. It's more the equivalent of a sales tax like we impose here.
Well, again, I think there's going to be a lot of back and forth. President Trump is going to be personally involved in the negotiations, and we will see what our trading partners.
He's not going to leave you in the room with Xi Jinping, is he?
Offer. For instance, there is talk of a big energy deal in Alaska where the Japanese and perhaps the Koreans, perhaps the Taiwanese would take a lot of the offtake and provide financing for the deal. So, that could be an alternative for them to come forward with that, because, not only would that provide a lot of American jobs, but it would narrow the trade deficit. So, right. Becky, everything's on the table.
Mr. Secretary, though, help us just understand this, and maybe it's a very nuanced answer because there's sort of a different component parts to this. So the president said yesterday with Netanyahu, quote, that these tariffs can be permanent tariffs, and there can also be negotiations. We also had Peter Navarro, as Becky mentioned, and you just talked about, saying that the whole goal of this is to bring manufacturing back to the U.S., and then there's been the discussion of trying to raise revenue as a function of the tariffs. All of those different ideas, to some degree, oddly enough, are at odds with each other, meaning if you're successful at creating revenue from the tariffs, you're not bringing jobs back to America necessarily, though that could be an offshoot of what happens. I'm trying to understand from your perspective whether these really are negotiations, they're not negotiations, what success at the end of the day actually looks like.
Well,
good question.
Andrew, that lot to unpack there, and let's just go through it piece by piece.
We'll wait for you.
That if we put up a tariff wall, the ultimate goal would be to bring jobs back to the U.S., but in the meantime, we will be collecting substantial tariffs. As I've said, I believe on this show that
that's all it's about. You want $1 trillion.
Tariffs would be a melting ice cube in a way, because you're taking in the revenues as the manufacturing facilities are built in the U.S., and there should be some level of symmetry between the taxes we begin taking in with the new industry from the payroll taxes as the tariffs decline.
Mm-hmm. Let me ask you a separate question, and maybe you can speak directly to the
He's waffling.
business leaders who are watching this broadcast, along with perhaps policy leaders and others who are frankly running other countries. I've talked to a number of them who say, you know what, I'm going to sit back and just watch all of this play out. I'm not going to make any decisions about whether I'm going to bring manufacturing back to the U.S. or, frankly, how much I need to negotiate with this administration, this is now other countries, just yet, because
exactly.
Depending on how the markets play out, depending on what you think is going to happen in Congress, depending on what you think is going to happen with the courts, all sorts of other things could happen first before I would need to make an actual decision as to either negotiating over the tariffs themselves, or if I'm a business, investing back in the U.S., because who knows what's going to happen, not just in 6 months from now, but in 2, 3, or 5 years from now, when maybe my plant would actually come on board or online.
Yes, so Andrew, that I think that may be what some of the countries are saying in public, but I can tell you I've seen the call list at the White House, and it's substantial. We were having a discussion last night about which countries to prioritize, and I think you are going to see some very large countries with large trade deficits come forward very quickly. I think we can, if they come to the table with solid proposals, I think we can end up with some good deals. And, part of the calculus on that may be that some part of the tariffs stay on. And I actually think, as I said, that over the weekend, President Trump has maximum negotiating leverage right here, right now. And I think it would be a mistake for anyone to think otherwise. And as I said, many of our trading partners, they have queued up, and they have kept their cool. They have not escalated, and they will get priority in the queue. I think it was a big mistake, this Chinese escalation, because they're playing with a pair of twos. Traditionally, if you look at the history of the trade negotiations, we are the deficit country. So what do we lose by the Chinese raising tariffs on us? We export 1/5 to them of what they export to us. So that is a losing hand for them.
What a silly argument.
What about the business leaders who are watching right now, who are thinking to themselves, am I supposed to actually make a commitment right now to bring manufacturing back to the U.S., or should I let this ride and watch all of this play out first before I make any kind of decision?
Well, Andrew, as you know, unlike we financial market operators, business leaders, they have substantial lead time. So I am sure that they are putting together.
I mean, that's such a silly argument, right? He goes, what have we got to lose? we've spoken about this in previous videos. Like, US are the world's biggest consumers. If you play games with China, US population will be upset. They're not going to have the iPhone they wanted. They're not going to have all these things that they're used to in terms of their quality of life, the products that they want to consume and use. They won't be able to have them, or the price will be very high, and inflation will, reap havoc across the country. Stop acting like you've got nothing to lose in this. You don't have that kind of a position. Definitely not with China. You can bully other countries like you did with Israel because you give them $3 billion in aid and they let go of $11 million of tariff money, right? Come on, we're not stupid. We're not stupid at all.
Other plans for what they would like to do when we finish these negotiations. So I think, again, they're not going to snap their fingers, find a greenfield site and build a factory, but
exactly.
I'm sure that the planning has already started in boardrooms because I spent the weekend
talking
to CEOs and investment bankers, and that's exactly what's happening.
Mr. Secretary, the actual tariff rate on Japan is 4.3%. The number that...
What a load of rubbish. We just read the article yesterday from BlackRock CEO Larry Fink, who speaks to all the big CEOs. And what did he say they said? They're worried about recession, not building a new factory in America.
Which puts a lot of weight on trade deficits to try to take into account all of the other protectionist policies. But there was kind of a lot of blow.
Oh, we've got someone weighing in the chat. UCBO, good to see you in the chat. Trump definitely needs to buy more Sonic to save America.
Intentional effort to make things look worse in terms of the protectionism so that the United States, so President Trump...
Right, let's leave that there. Let's now jump on to the markets. I do want to take a look at the crypto markets. We've got Bitcoin up 1.1%. And let's try to look at the response from altcoins. Let's get a refresh of the good old crypto bubbles. We've got a nice little field of green, which is fantastic today. Fartcoin up 12%, Avalanche 6%, Jasmy has got 18%, Render up close to 9%, BitGet token 3.6%, Hyperliquid up 9.5%, HBAR with that news has gone up close to 12%, Jito up 5.7%. Some nice green in the market, some decent green in the market. Let's look at some of our favorites in our list as well. You've got Cardano up 5%. How's Sonic doing today? Sonic flat. Not a good response from Sonic today, which is interesting. Solana up 3.5%. Spoke about Avalanche. Any other big movers to worry about? Silica moving 9%. That's a blast from the past. That was 2021 cycle. What else we got? Kato up 5%. Ethena up 4%. We spoke about Hyperliquid. Say 2%, 2.7% on Sui. Okay, decent response. At the end of the day, look, on the daily chart here on Bitcoin, we're still well beneath our EMA ribbon, right? We're not out of the woods here. Anyone celebrating, it's too early, right? Yes, we've come here, created a bottom, we've gone back up, created a bottom. We need to form a W pattern. We need to get back to this neckline here, and then we get a W pattern to move to the upside. Reclaim the EMA ribbon in this zone, create this W reversal pattern, and that's our path to get back to 90,000, etc., etc. A lot of work to do. The bears are going to want to fight us at this level. They're going to want to just do this. They're going to snipe us from kind of 83, 84 level to push us back to the downside, and their target will be back below 74k on the next leg down. So all to play for once we work our way to the EMA ribbon. Again, still some work to do to get to the EMA ribbon, right? That's something we need to work on here in terms of the market. Again, crypto is just moving in kind of in lockstep with the traditional markets. If traditional markets continue like they've done today, which is jump up 3.7 and 4% on the NASDAQ, that is good news, right? That's something we will celebrate, and the markets can move on the back of that. Now, remember, earlier in trading, you saw a good bounce in Asian markets. I tweeted it out when I woke up earlier this morning. You had, the Australia index up 2.27%. You had Japan on the Nikkei up 6%. Nifty 50 in India up 1.7%. The Hong Kong index, the Hang Seng index up 1.5%. And Shanghai was also up 1.6% in China. So you did see a good response here in the Asian market. That's carried through here into the US market as well. And of course, we are correlated on Bitcoin. Anybody who wants to say otherwise, right now we're correlated. There is a argument to be made that Bitcoin can move as a counter asset. I get that, as a defensive asset, but at the moment we're more correlated than uncorrelated for the time being, so it's important to maintain that. Let's jump on over to see what's going on. Let's see if we can get maybe we can get CNBC up. Let's see. Let's see what we got here.
Bit. Clearly over the past, I would say, 12, not quite 24 hours, the Navarro wing has been a little bit in retreat here at the White House. Navarro on CNBC yesterday morning, this negotiation led tariff permanent.
That's not very nice. CNBC breaking up on us. Let's try Bloomberg. Okay, they've gone for a break, so let's carry on here looking at the markets, and let's take a look at the headlines here. So we spoke about that. Elon Musk blasts Peter Navarro, dumber than a sack of bricks. That's funny. Excuse me. Let's take a read of this. Tesla CEO Elon Musk is sharply escalating his attacks on top Trump trade advisor Peter Navarro as he defends his car company. Oh, Trump has suddenly remembered. He's a CEO of a car company. Oh my God. So he knew Trump was going to do this whole tariff thing for all this time. He was tight with Trump. He knows exactly what the policies are. He endorsed him. And suddenly now, he remembered that he's the CEO of a car company where people are burning his cars. His stock has gone down close to 50% since inauguration. And he's just remembered that's his main breadwinner. Like, come on, Elon. Tesla has the most American-made cars. Navarro is dumber than a sack of bricks. By the way, for those who don't know what's going on here, this is because Navarro says that he's spoken to Elon Musk. Navarro's this guy here. Let's see if we can get the clip, actually. This was funny. Let's watch some of this.
Reportedly reaching out to negotiate tariffs with President Trump over the weekend. Joining us now with the latest, President Trump's senior trade and manufacturing advisor, Peter Navarro. And given the backdrop, Peter, of what we've seen, the tumult in the markets, and the S&P could theoretically be in bear market territory.
Because, Becky, it brings home our domestic manufacturing. I mean, that's...
Trying to find the clip where he talks about Trump. I'll just save you the time. What he basically says is that Trump is not even a car manufacturer. He says he just assembles the pieces, all the pieces he buys from elsewhere. So he fired shots at Elon Musk, which is why Elon Musk is firing shots back. Musk, in a deleted tweet, said Navarro ain't built. In a separate post, Musk questioned Navarro's credentials, writing, PhD in economics from Harvard is a bad thing, not a good thing. Okay, so, they're firing shots. Look, at the end of the day, Elon Musk is just trying to backtrack on the whole tariff. He's posted a clip from Milton Friedman, the famous free trade economist, saying that, you need free trade in the world. And, Musk is letting his stance be clear on the trade dynamic. He's saying no to tariffs. He wants free trade. Of course, as a manufacturer of an automobile company and a rocket company, the tariff, the wide sweeping tariffs that Trump has introduced is not good for him nor his companies. Okay, so that's a given there. Cambodia is being hit with the single biggest tariff rate of all at 49%. Nobody cares. Trump claims China wants to make a deal but hasn't reached out. Trump says China wants to make a deal. That's like me saying she likes me but she doesn't ring me back. Yeah, all right, mate. All right. They don't know how to get it started. We are waiting for their call. It will happen. Trump also held what is described as a great call with South Korea's acting President Han Duck-soo. We have the confines and probability of a great deal for both countries. At the end of the day, the market only cares about the big ones, right? We care about the big bosses, the big ones. That's what we care about.
Based on the tariff policy that went into effect on Saturday and what's going to go into effect tonight?
Well, Ken Griffin hasn't lost money. His investment firm was flat almost last week. It lost just 35 basis points. So in his case, especially, it doesn't seem to be driven by the returns itself, but generally its view on the economy and how the tariff policy is really starting to affect the economy, the chances of a recession in U.S., and of course the stock market and asset prices melting.
And, you know, I would say we don't know the numbers actually for the first quarter for Citadel Securities, but given the volatility, what the bank's trading desks do, I'm sure will be a good barometer of how well they're doing. Nishant, I want to kind of knock down the notion that all hedge funds are failing or all family offices are failing in this environment. You are out with the headline of Michael Platt's Bluecrest just soaring. Bridgewater, at least through March, was really up double digits, close to double digits, if not more. Schoenfeld is up. Who's benefiting in this environment?
I mean, really, Michael Platt making money during episodes of volatility is not news anymore. Like, he does it all the time. He has this amazing money printing machine. I mean, look at his returns. It's annualizing at 30-40% since he returned capital to investors. The key behind his stellar performance is, of course, mountains of leverage. That's what makes it trade click, and that's why he makes so much money. But generally, if you look at multi-strat world, I mean, they have fared, considered like really well. I know 0 is not a number that one celebrates when it comes to returns, but essentially, if you were flat last week, that was a remarkable achievement, and we see that across multi-strategy hedge funds. Schoenfeld even made some money. Citadel kind of flattish. Millennium minus 70 basis points. Balyasny flat. So these are some really solid numbers at the time of this market chaos.
All right, Nishant, thanks so much for joining us. Bloomberg's Nishant Kumar reporting on hedge funds out of London. Still ahead, Elon Musk calls Trump trade advisor Peter Navarro a moron. Says he's truly a moron as their White House feud turns ugly.
This is the greatest superpower. This is it. This is what it's come to. You're dumber than a sack of bricks. Unbelievable scenes. Like, you would think, right? Let's just mute this off. You would think, right? When you're looking at all of this, you're like, the world's biggest country, the world's richest man. They must be having some really intellectual, really deep, profound, conversations going on. But in reality, they're tweeting each other in less than 120 characters. You're dumber than a shit of bricks. Okay, and this is what's going on right now. And then he goes back to Elon. Yeah, well, you don't even assemble cars anyway. You don't manufacture cars anyway. You're just an assembly line. You just put the pieces together like a jigsaw. Whoa, you got me. Unbelievable. Unbelievable. Right, things to look out for this week in crypto. Take a look. You've got the XRP stuff going on the New York Stock Exchange, ARCA, Mercury Network upgrade, US House Financial Services Committee hearing. We'll look at that as well. Status conference for the Terraformer Lab CEO Do Kwon at the US District Court. That's going to be interesting. US SEC Task Force Roundtable later on this week as well. From a macro perspective, we still got a lot more to come this week, okay? So April the 9th, which is tomorrow, which incidentally midnight tonight is when the tariffs go live, we get inflation, right? So we're going to get important inflation data coming out, core inflation data and inflation data coming out. April 9th, China's 34% retaliatory tariff goes back onto US imports as well. What effect will that have on markets? We also get the FOMC minutes released, although they're going to be out of date because they're minutes from the last meeting. But nonetheless, it might give us some clues around, what the Fed are thinking. You get China's National Bureau of Statistics later on as well. And then later on in the week, that's going into next week now, April the 14th. Nayib Bukele, which is the El Salvador president, will visit Donald Trump at the White House for an official working visit. And that's about it. We've got a few key crypto token unlocks. You've got Move, Tensor, Aptos, ASX, Stark, Arbitrum as well. We've got some token listings as well. Avalanche to be listed. Nobody cares. That's about it. That's what you got to watch out for here in the crypto markets coming up over the next few days. I will be obviously covering these off with you on live streams together, so you won't be alone to navigate that. Let's take a look at the liquidations. Let's see what our liquidation heat map is saying on crypto. Again, if you guys want to follow along, you go to coinglass.com, click on liquidation heat map at the top, pull yourself out this liquidation chart. And this is what market makers play with, right? They want to grab liquidity to the top side. They want to grab liquidity to the downside. There's still attractive liquidity at this level, right? 77.6. But you can see more liquidity starting to build out above. If we zoom out a little bit, just click on the weekly time frame here, you can see that thick cluster of liquidity around 85. That starts to become more and more attractive. Now that we've wicked down and grabbed the liquidity around 74, when I say we, I mean the market makers liquidating all those, you know, leveraged chaps who are taking trades, they're going to be tempted to go take that above. Okay, let's now zoom out to the monthly, and it's always worth just kind of zooming out on the time frame so you can see where the bigger liquidity sits. You can see this is an attractive piece of liquidity, right? Particularly on the monthly time frame. It's probably not until I go on to the 6-month time frame that you start to see a bit more parity above and below. So the bias for me, if I'm looking at this chart, which I am with you guys, is that it's to the upside, right? More likely to go to the upside.
Details. So aside from, you know, the fake economists that Navarro cites in his research, what do we know about this feud?
Well, I think there is certainly a rift between Elon Musk and others around Donald Trump on the issue of tariffs, right? There were reports over the weekend that Musk had made a direct appeal to Trump in the hours that preceded the news of Monday and the markets of Monday to rethink the tariff stance. What's interesting, though, is like Tesla is the most insulated of the US automakers and the foreign OEMs that manufacture in the United States, right? There is data, it is in Tesla's 10Ks and the annual impact report that it publishes about the volume and locality of components that are assembled. So take Austin, for example, Austin, Texas. Tesla's VP of Finance pointed out that the powertrain or drivetrain components, not just the assembly of the car itself, but the motor and the battery pack are all done there locally on site. And, you know, Musk himself referenced this Kelley Blue Book data that Tesla makes the most American-made cars. But that's data that's there to see. Clearly, there is some pressure, though, coming from somewhere.
Yeah, absolutely. I do want to check at Tesla shares up about 6.7%, close to a session high. I don't know if that's related to this feud that we're seeing play out on social media. But, Ed, you make a good point. I mean, that there's...
No, it's not. It's just a wider market bounce.
Feuding right now. Elon Musk, obviously, is part of that feud. And this comes as... potentially we're counting down to when his time as a special advisor to this administration comes to an end.
Yeah, I mean, the Doge position is a remit. You know, it's in the documents communicated by the White House that it has a term limit up until, I think, July 1st, right? And the White House has very recently denied a report that Musk would leave that role early. They said it was, you know, fake news. But at the same time, like, up 6% in a session, what does that mean in aggregate over a week where Tesla's been absolutely hammered? There's big concerns from the market.
Exactly.
Just by association. Forget the tariff risk. Of course, there is some modeled into Tesla's share price because raw materials, and there is an element of cars exported from China to the European market. It's a global story, but the association risk is the bigger issue with this stock.
Guys, just a reminder, don't be part of this, right? In the last 24 hours, $268 million has been wrecked. $250 million have been wrecked in liquidations, and yet the price of Bitcoin, had you have just held it in spot, has done all right. This is the point. You're getting yourself wrecked for no reason. Look at the Bitcoin chart, right? These are daily candles. Yesterday, we were up 1%. Today, we're up 0.5%. So call it 1.5% combined, right? And yet, in that same time frame, 260 billion managed to get wrecked. Why? Because of the wicking candlesticks. The volatility. Look at the volatility. The wick on the top side, wick on the downside, wick earlier today, wicking down to the... These wicks are what's wrecking you. If you just hold spot, it doesn't matter. Because for you, the chart looks like this, right? The chart looks like this and it doesn't matter. But when you're holding with leverage, that's when you get this wicking pain and these things wreck you. Okay? Really, really important. Stay away from that leverage, guys.
Right now, the S&P 500 up by 3.7%. That is the biggest intraday rally since November 2022. Remember, 2022 was a painful year for the S&P 500.
All right, guys, good market open live stream. Markets are looking good. We'll try to check in later on today as we get closer to the US close. Bitcoin trying its best to maybe go mountain attack towards 80. We did touch 80 earlier today, went as far as 80.8 in this daily candlestick, which is really good. Can we close above 80K? I think that'll be a really good level for us to gauge the recovery today. Again, we're so susceptible to the news. It just depends. I could log off in an hour's time. Trump has said something, or he's advised has said something, Besant has said something, Navarro has said something, Lutnick has said something, Trump has said something, or, you know, Elon Musk could say something, and we're wrecked again. So lots going on. You got to be in tune with the market, and the best thing to do right now, stay in cash, ready to buy the dip, and just only have high conviction plays. Spot, no leverage, no margin, and you can see out tough times like this, okay? And ultimately, you'll be thankful that you did. Hopefully you enjoyed this live stream. If you like this type of content, share up. Let me know in the chat what you guys enjoy, what you want to see more of. Let's have more engagement. Let's get more people coming to these streams if you find them useful as well. And I'll see you in the next one.